I've been trading ICT for just over 2.5 years, and in that time I've seen a lot of misinformation about order blocks. So in this video, I'm going to give you a complete no-nonsense guide on order blocks that I wish I had when I started. And just as a disclaimer, some of this information is directly from ICT and some of it is from my own personal experience using order blocks in the past 2.5 years. But let's get started. If you've been around ICT content, then you've probably heard the phrase, a change in the state of delivery. Now that is the textbook definition of what an order block is, but what does it actually mean? So the state of delivery is simply the direction that price is moving. So if we are moving in a downtrend, then we are in a state of downwards movement, a downwards delivery. A change in the state of that delivery is when we are in this downtrend and then we shift upwards and we change into an uptrend. And on a chart, that looks something like this. We are in this downtrend and then we shift and start going higher. Now, the actual change in the state of delivery is this little section here, but let's first talk about what exactly an order block looks like. So here on the chart, we have a bullish order block and a bearish order block. Now, when you're using order blocks, there are three main levels that you're going to need to focus on. For a bullish order block, those are the high, the open, and the midpoint or mean threshold. And then for a bearish order block, it's basically just flipped. We look at the low, the open, and the midpoint of that candle. Now you get the midpoint by just taking a fib and going from high to low of the entire range. If you are looking at an order block that is more than one candle, because they can be consecutive candles, then you would measure from the high to the low of the entire range of those candles, not just the last one or the first one. But for any order blocks you're going to use, these are the levels that you're looking for. These are not zones, they are not areas we want to see price come into and then like kind of support and demand idea, see it bounce off somewhere random in the range. We want to see it react off very specific levels, and those are the levels that I've shared here. And one final thing to note, a bullish order block is always going to be a down close candle, and a bearish order block is going to always be an up close candle. So now you know what an order block is, let's talk about how to find it and how to determine if it's high probability. So the first example of how to find them, we're going to use an example of a trade that I took on stream last week, and feel free to subscribe so you don't miss out on any of those streams. But in this example, we're going to be blending higher time frame and lower time frame analysis. So the first rule I'm going to give you for high probability order blocks is that they are going to overlap with a fair value gap. So in this example, we're going to be using this 15-minute order block here. And you might be thinking, well, that doesn't overlap with the fair value gap. Well, it actually does because it is part of this fair value gap here. Even though it's small, it's still a fair value gap. So when I say it overlaps with a fair value gap, what I mean is it can be a part of a fair value gap like this, or if you extend the levels that I've shown you out from it, it will cross over with a fair value gap. Either two of those situations make it a high probability order block. And then if we extend this order block all the way to the right, you can see that it digs into it, but not only does it dig into it, if we measure it from high to low, look at the reaction we get from the mean threshold. The bodies weren't able to close below the mean threshold of this 15-minute order block. And then if we drop onto a 5-minute chart, you can see those 15-minute order block levels extended here. The yellow is the mean threshold, which it reacted very nicely off. And then it displaced through these consecutive down close candles here, which is now one order block. And then we also have this fair value gap here overlapping with the order block. So with all that in mind, this is absolutely a high probability order block which you can take a trade from. Personally on stream, I traded this as a 2022 model, and you can go back and look how that played out. I'll give you a clue, I went long. And then the second place a high probability order block will form is after a run on liquidity. So here on this 5-minute chart, we can see that we ran above this liquidity here and then displaced below it. Now, while this doesn't have a fair value gap overlapping with it, at least here, it does down here, you could still absolutely use this level as a short because it has the narrative there of it's ran stops, it has sell side down here, which it is going to reach for, and it has displaced through this order block. Now, at the extremes of the range isn't the only place they'll form. They can form through the middle of the range as we're moving in price, but that is a bit more difficult to get a high probability order block. The most reliable ones are going to form at the extreme ends of the range when we reach into a significant liquidity level or a significant higher time frame PD array. If you are going to be looking for them in the middle of a range, what I would tell you to do, and similar to what I did with the previous example, is make sure that it overlaps with a fair value gap. If you do that, then hopefully you should be able to filter out some of the order blocks that you think are order blocks but actually are just noise. But that's everything I wanted to tell you about order blocks in this video. I hope it was helpful and you learned something, and if you did, I would appreciate a like and subscribe. And right about now, YouTube should be recommending whatever video of mine it thinks you'll like, so you may as well go give that a crack while you're here. It should be right there. But that is all from me. If you are trading this week, then I will wish you good luck, good trading. Catch you later, boys.